China is winning. China is collapsing. Every day, we are fed with conflicting narratives. What is really happening? Welcome to the Schelling point in China. Our mantra, seeing is believing. Because when it comes to China, seeing is the only way to believe. In this episode, the truth.
Everything in China can be explained or is downstream from human capital development. It's important because like the law of compounding, China, it's compounding now off a much, much larger base. The Chinese EV sector is actually the only segment in the world that is profitable on a non-subsidized basis. Both China and the US, the biggest enemy is going to be internal. Like the only reason why the US or China is going to collapse is internal.
We are used to measuring economies by the rules of the 20th century. GDP, stock market, trade balances. But what if we are missing the most underrated factor? Scale. Meet Glenn Luk, banker, entrepreneur, and China watcher. Leveraging his analytical skills honed on Wall Street, he argues with data that we are all wrong. China isn't just another large nation state. It is a continental economy functioning as a single coordinated machine. What a country of 50 million has to specialize to survive, a country of 1.4 billion can do everything all at once. China doesn't have to choose. High-speed rail, EVs, and robotics. China can do it all. Its sheer mass of human capital and ruthless competition culture are the reasons why the world keeps getting surprised by the breakthrough coming from China. Today, we break down the SimCity model of development. Let's dive right in. Today, I have with me Glenn Luk. Hey, how are you, Glenn?
I'm good, Bertrand. Good to be on your podcast.
Yeah, thanks for making the time today. Can you give us a sense to what's your background?
Yeah, certainly. I'm happy to provide a quick intro. And I think part of the reason why I gained my interest in China and the Asia Pacific region was because I began my career after college working out in Hong Kong, doing investment banking with Deutsche Bank. I spent 3 years out there. This was a few years after the Asian financial crisis, and it was at the time not a particularly well-trodden path to go out there from the US. It was personally for me, it was my first experience overseas, quite eye-opening. I was scheduled to ship out to Hong Kong on September 15th, 2001. And I was
Oh, wow.
in
Okay.
New York City training at that time. So we got hit by 9/11. You know, looking back in retrospect, that was just a very, very critical moment, I think, in history in the region, well, in the U.S., of course, but it was certainly for me personally, it was like everything before 9/11 was, like it was like halcyon colors and like very optimistic, and everything afterwards was kind of gray. And you can almost follow the geopolitics of that, where you had this like brief period where the U.S. was really on top of the world. That was what I grew up in, and then afterwards things started to change. So I went out to Hong Kong, and just a really fascinating time because China was just up and coming. Most of what we did at the time was in energy and power companies on M&A, and that was mostly SOEs. So it was just very, very interesting for like an ABC to go out there and be sitting across the table from SOEs, and it's just a very, very different culture. So big culture shock for me. My background was in technology, and I had a desire to eventually go back to the States. So after a few years, I joined a venture capital firm in New York, more late stage venture capital, and eventually it really became more technology, private equity. So I was able to pursue my interest in technology and invest on the buy side and invest across a lot of subsectors within the space, from software to digital marketing to IT security. We built a lot of good contacts. In 2014, I had kind of a career decision to make, and I could have gone on to be a private equity lifer or pursue the entrepreneurial path. I decided on the latter, and I had the opportunity to co-found a company in the health insurtech space called healthcare.com alongside several of my other co-founders. That's become a decent sized business today. I actually left in the interim to start a couple of other companies in the ed tech and in the crypto blockchain space. But recently I've gone back involved with healthcare.com as the company's now reached a size and scale that's actually, for someone of my skill set, with institutional investor background, it's a good fit for me to get back involved. So for me, actually, interesting, because we're going to be talking about China. I think people may be wondering why I remain interested. I think part of it was because I began my career out there, and for a big chunk of my career, I think there's an eye towards eventually going back out to Asia and doing something in China. The crypto blockchain venture that I took part in was a US-China collaboration. I think around 2018, I realized that that just wasn't realistic for me personally, as well as just given the geopolitics of the US-China relationship. It just made any sort of cross-border collaboration very, very difficult. So it's been an interesting journey, but I still remain personally interested in the region. I think for me, I started on Quora, but my Substack and then my Twitter are kind of like outlets for me to just stay abreast of what's going on out there, and talk about a topic that frankly most of my friends don't want to talk about. So I more like my in real life friends don't want to talk about it, but like my friends and the community we've built on the internet are interested in the topic. I very much enjoyed building that community and being a part of it.
Yeah, the reason I discovered you is Substack and Twitter. I think you probably have some of the most interesting thread on Twitter, and also post on Substack that's heavily driven by data. There's a lot of people have opinions about what's happening in China, more vibes and what they think, as opposed to, I think most of your point is rooted in either economics or financial analysis, which is very refreshing. Like my background is in finance. If you come from finance, I want to read this because it sounds like this is something someone has spent some time thinking about it instead of just writing what you think or from ideological perspective. And I think that's really what's attracting me to read your post, and also today to have this conversation with you. But before we talk about some of the point that you made online, which I think is really interesting potentially for the audience, why do you think talking about China is that so important today compared to, let's say, 7 years ago when you first started?
Well, I actually think it's always been very, very important to follow China and to stay up to date. I remember going back to China, in like 2007, 2008, after I left for like 4 years. I spent a lot of time in Beijing in like 2003 and 2004, and I went back 4 years later, and this was right after the Olympics, but it was completely different. So that has continued. I think every time people go back, it just changes so rapidly. But I mean, it's important because, it's like the law of compounding. I think as China has continued to grow at a robust rate, it's compounding now off a much, much larger base. And so that incremental impact of its growth and impact on everything from trade to geopolitics to culture, it's just massive. So I think that's where just staying abreast of it, even though I haven't really done anything with it, in China for a very, very long time, I think is important. There's also, I have invested at various points in like the stock market and stocks in the region. So that's another reason to keep abreast. But it's less because of that and more because of what I talked about earlier, just the overall importance of the topic, and frankly just getting China right. Because I think to your earlier point, it's been a constant battle to correct a lot of the misconceptions about China, which I'm looking at it from like an American perspective, and I think it's much more beneficial to have an objective, realistic view of what's going on versus trying to maybe feel good about it or just ignoring it. I think you can't ignore China. It's just too big. It's too impactful. A lot of my investing in America, for example, is almost like indirectly related to China. I told you I spent the two companies I've been involved in or founded here in the U.S. have been in workforce development, ed tech, and healthcare. And those are two industries that are probably going to be the last industries to be impacted by China, which is a good thing, I think, because I think a lot of industries, you saw it. I remember you saw it before, first with a lot of these very, very capital intensive, industries like shipbuilding, or building offshore oil rigs, where the Chinese companies would just take that capital intensive model and crowd out the competition. And then it's been the last 10 years where you've seen that happen in technology as China has moved up the value chains. Again, just being ahead of that, and just understanding China's impacting more and more sectors in the world. So it's very, very important to keep track of.
Hey, Zach in the editing room here. I realize that 76.8% of you have not yet subscribed to the Schelling Point. If you could just hit the subscribe button down below, it will really help us out and keep producing content like this. Thank you. Now back to the Schelling Point.
If you try to encapsulate your framework for understanding China, What's your mental model about China?
I guess it really depends on in what context. Maybe it'd be helpful to clarify, like, is it in like a geopolitical context, like an economic context?
More economics, and then how you would impact, let's say, in US.
Yeah. So, I mean, one of my big themes that I talk about a lot on Twitter is demographics, and the impact of the labor force development in China. Traditionally, this conception of China was around the importance of like one-child policy and declining TFR, and then this dependency ratio. It's like demographics 101. So just as an aside, I took demographics in college. I was actually a CS major and a finance major, but my favorite class in college was a sociology class, and it was demographics. And the way that people apply demographics to China is very, very superficial. My demographic, mental model for China is this gradual shift in the workforce. Like 30 years ago, the shift was rural to urban, and that was largely a blue collar shift. That was the Lewis turning point. A lot of other, I think, developing economies have come through that. But I think the more recent shift, the last 15 years, has really been about this shift within the urban workforce from non-college educated, largely blue collar workers, largely migrant workers, to the college educated, largely white collar workers that are living in the cities. And that's just such a tremendous shift that's going on right now. And we're seeing it firsthand play out in the development of competition rising in a lot of the high value added industries that 10 years ago, I think people generally scoffed at China's ability to reach the innovation frontier. And it's like, the general perception that it can only copy, it can't innovate. But I think they weren't watching the demographics, which was like starting in like the late 2000s, early 2010s, the college graduation rates went from under 25% all the way up to 60% today. And that is actually such a huge demographic transition, and that's driving everything now that I think we're seeing. Not only is it driving everything across multiple sectors, I think it's happening at like just a faster and faster pace. So I think that's what's catching a lot of that ties into the skull chart, right? Because for a long time, China was catching up, but once it caught up, trajectory started to take over, and now it's just continuing to go linear or even exponential in some cases. So I think that's the biggest thing. I like to say, like, everything in China can be explained or is downstream from human capital development. And I think that this wasn't something that just started in the last 10 years. It's just that out in the West, we've only noticed it in the last 10 years because it got to that point where they caught up so demographics is one of my key mental models and frameworks that I apply to analyzing China.
I think also recently that I've seen in China, and a lot of people I think misunderstand that, and it is to some degree the misallocation of human capital. So I study engineering. When I graduated, the most of his job is finance.
Yeah.
And then basically, I think that's the case for most of French engineers of my generation. I think if I can count in one hand, most people are not becoming engineers. They all went to finance. And I think the fact that China basically has been able to say, you know what, too many people in finance, that's not very productive. Let's move that to hardware, to real manufacturing. That's also having an impact. So you start with a high level capital, more people, and then you direct them. So yeah, so it's I couldn't agree more with your point.
I mean, it ties into, I think, just very basic economic concepts like specialization. I think the other anecdote that I saw recently was how China had something like 20 rare earths, like majors or like specialties in the university. And so like that's actually just Adam Smith economic specialization in a modern era. One of the other mental models that I think is that China is, from an economics perspective, actually exceptional in one regard, which is their scale. And their scale allows them to actually get the best of both worlds, which is to be self-sufficient and autarkic, yet not lose the benefits of specialization, because they can have 20 rare earth university programs and still have plenty of resources available to tackle AI and to build civil engineering and mechanical engineering for HSR and do all these other things. I remember one of the criticisms of China was like in their sort of move to be more self-sufficient or to like do import substitution and besides the national security effects, this was even before that became a thing. This was like in the early 2010s, was this criticism that, well, autarky is economically inefficient. But one of my mental models is no. I think China recognizes that people usually, for the typical country, it's economically inefficient because the typical country isn't 1.4 billion people. It's 30 million people, and they have to specialize. Right? But for a country of 1.4 million people, you have to almost think of it as a continent. And they can specialize and be self-sufficient within the continent. It's kind of like saying the same thing about like the European Union, where you grew up, right? The European Union can be self-sufficient. It's big enough. It's just that the European Union is split up into 30 or so different.
They can coordinate. They cannot coordinate.
Trade amongst each other. They actually do trade and specialize that way. So China needs to be, I think, viewed more as a continental-sized economy versus a normal economy. And I think that the bureaucrats and policymakers in Beijing actually recognize this. They recognize that this is our unique factor. We are big and we are scalable, and we're going to use that to our advantage. It has disadvantages as well. We can talk about what those are, but certainly the scale advantage is something that they lean into a lot.
Yeah. I think the other thing you were going to say, also comment on the allocation of resources, right, from finance.
Yeah. So, same thing with me. I was part of a business and engineering program, and I recently did like an alumni town hall meeting, and the alumni head was going through some statistics about the professions that graduates of the program were in from the 90s, from the 2000s, for the 2010s. From my cohort, which was the early 2000s, 70% of the people went into finance or consulting. And this is like a very, very top engineering and management program. And most of that, very, very, I took classes, and they're very, very smart. It's top human capital. They went into finance. And, I think that there's something to be said about how, there's certain industries, like in finance, it's like how much alpha is out there. I believe that there is almost like a fixed amount of alpha out there. And so the more elite talent that you put into it, it's just dividing that sort of fixed pool amongst more mouths. Or it is actually pulling from other sectors, like extracting and having these sort of negative externalities on other sectors, just from a sector perspective. Law is a little bit like that as well. And I think, some other functionality. But so I think China has like recognized that, and they've taken a very pragmatic approach to, some may say they remove the individualism from people, but they look at people as production assets, right? And it's like, do I allocate that production asset in finance, or do they put it in engineering? And they're not saying we completely ignore finance, but it's left in a sort of very basic format. But I think in China, like the elite talent goes into engineering. I think that's pretty clear. And I think Beijing wants it that way because of some of the sort of negative externalities that we talked about. I think one of the big problems that America faces, there's a lot of good things about America. I think we do have some of the top universities and institutions. We do attract the best, and the brightest. We get our first pick from global talent, including from China. But the issue is, my view is that it's somewhat suboptimal. The industries that really get the first round pick of people coming out of our university system, and we could do a lot better if we took a more strategic view to it. I think China does take that strategic view to it. We're seeing like some of that momentum now play out.
Yeah, no, absolutely. I think that the human capital is probably the main dominant thing that's people don't understand quite well. I like to go back to some of your best stuff on Twitter. I think the thread that's the first time I really found you, I think, on Twitter was all the debate you have about the malinvestment argument. And I think the archetypical example for that is about high-speed rail. So can you explain what is the general consensus, how high-speed rail is actually a poor investment in China, and your understanding why actually this narrative may be wrong, and how people should reason at high-speed rail in China?
Yeah, that's sort of where I started. That was the topic that got me the first Twitter following, was talking about high-speed rail. In general, I'm just a very big fan of public infrastructure. I remember when high-speed rail actually first started, like the talk about high-speed rail, this was like in the early 2000s, started coming out of China. And China was a, objectively poor country at that point. And, I was thinking like this was just, bombast and like, just chest thumping that wasn't real. And, the first time I actually rode a high-speed rail was in Taiwan. It was in 2007. I think it had just opened up, and I thought it was great. And a year later, at the end of 2008, the first line started opening up in China. And honestly, I'll tell you, like, Bertrand, like, I thought that it was fake. Personally, like, I thought it could be real. It had to be like some cheap version, like, some copy. It didn't really hit me until a few years later. I didn't really think about it too much. It didn't really hit me until a few years later that it was actually pretty real. I think there's a lot of prevailing notions about the Chinese development model. And I should say this: I think today the vibe has changed on high speed rail because I think it's just. I think I played a role in that. I've delved into some of the numbers and just taken a very objective kind of approach to analyzing it and comparing it with like high speed rail systems around the world. But back then, I think it was number one, there wasn't that much data on it. It was up and coming. Number two, I think you had just a very poorly timed the Winzo crash in 2011. It went like 3 years into the program, major crash. I think HSR was seen almost as like the the embodiment of the Chinese state capitalist system where the central government is directing and allocating resources. And there was definitely, a bias against that model. And a lot of people, I think, express their almost, I call it ideological views on state capital versus market through HSR. Right. And like I said, it impacted me. Like I saw the crash happen. I was like, yeah, I think there's a lot of truth to that. I in the back of my mind, I was also thinking, well, I'm the type of person who needs to, I'm open to both sides. I need to see the data. I need to touch and feel it myself. I've never even, taken a train. Interestingly, my dad, who spends a lot of time in Southern China, he had taken it. He was like, yeah, he was like, son, like, it's pretty good, but it works. I was like, really? I was like, I'm a little bit skeptical. I actually took it for the first time in 2016. I was like, you take it and you're like, yeah, it's no different from Taiwan or from, I taken the Shinkansen at that point as well. Yeah. I taken the TGV in France.
In France, yeah.
It's like a high speed rail system. I didn't know what the big fuss was about it, like why people were making such a big deal about it. And then I started looking into the numbers, and I think this borrows from my background as an investor, where you have to do due diligence on companies and dig deep into the numbers and understand and analyze. And for me, that's just my default approach to really understanding and building conviction in these ideas. And so I started to digging into the numbers. I didn't even know where like if there were numbers available. I was like, oh yeah, of course, like China's like not transparent and there's no numbers out there. But then I looked and like I was like, oh, China Railway is one of China's largest bond issuers, and they have quarterly financials just like a public company, and nobody seemed to really pay attention to that. So I was like, now they're all in Chinese. And so you have to dig. So there's reasons why people weren't paying attention to it. And of course, I think the other thing is just that I don't think people really wanted to. They'd already kind of made up their mind. They don't really care about confirming whether they're wrong or not. But I was like, I'm curious. I wrote it. It looked pretty good, and I found the numbers. I started to spread them in a spreadsheet and look at them. And I was like, hey, actually, it's not as bad as people think. Remember, HSR was being held up as like the prime example of Chinese malinvestment, the paradigm example. Now, the irony is, I think there are other sectors.
Real example.
Like HSR has actually turned out to be, I think, one of the best. There was a 2019 World Bank report. The World Bank had lent money to 4 lines in the first phase, and they lent their transportation expertise because they had been involved in other infrastructure and rail projects around the world. So they were, and it's the World Bank. I mean, they're pretty much a neutral observer. So when they came out with that, they're like a credible source. They've got access to on the ground details, and they're neutral, right? Which I think that was when I really built conviction, because I was like, it's not just me kind of saying this. It's also, a neutral, independent third party that has real, relevant, credible expertise. So when they came out with that report, I think it was pretty clear to me that not only was HSR not malinvestment. There are certainly some lines that, probably shouldn't have gotten built, but there are other lines that make up for it. Like, in my view, you have to look at the the entire system as like for better or for worse in totality. You can't you can go to any sort of portfolio of projects and be like, hey, that one shouldn't have been done, therefore no. I think you have to look at especially if you're using it to make a pronouncement or a judgment on the system that produces it. You have to look at it in totality. So you have to like take the Beijing line and Shanghai line, and you take like the best and the worst, you average them together. I actually did that. I actually, what I did was I cut out the outliers and I averaged the rest of the network together. And I was like, hey, it's still like ridership and utilization is still double the TGV in France. And my impression of the TGV is it's been a fantastic investment for France. So that was like I think aha moment for me, where I was like, wait, well, if you kind of work your way backwards from the thesis that the state capitalist model is inefficient and leads to just massive amounts of malinvestment and misallocation, then and HSR is the prime example of that. Well, if HSR is proven to be not true, that's actually a pretty good investment, especially not only just on like the financials alone, but even more so with the social impact and the positive externalities that it brings. But like even on the financials alone, it's not that bad. Then it sort of makes you start to question the entire thesis of state capitalist model and whether China actually has been doing a pretty good job developing itself versus what people think about it.
And I think you were also saying that there was another blind spot people had was commercial real estate, right? So actually there's other source of money, not just purely ridership. Is you have network effect, people actually going to those train stations and conducting business. Actually by itself has another component of value.
So that was just like putting my financial analysis hat on. I was like, well, what's the business of rail? And the business of rail is not just, ticket revenue. It's selling food, selling advertising, selling foot traffic. You've got a captive audience and you can monetize that. That's actually like a really, really good way to support economic investment into rail, is by capturing the captive audience that you have. There's a lot of good business models that are like that, where they have a loss leading product. But then they sell something, ancillary product on the side. So that is actually real. And, when I was in Hong Kong, like our energy and power group sat next to the transportation group. So I did have through like osmosis, I got some understanding and knowledge of the transportation business. And then their big client was like MTRC in Hong Kong. And I knew that was just a real estate business. It's like they made all their money by selling the land that increased in value because you're bringing that foot traffic. So it's a very, very valid model. And if you apply that, like you do it for MTR Corporation, which is one of the most profitable public transportation companies in the world, and you apply it to China. And by the way, like, of course they would look at MTR Corp as a model because, in fact, I think MTR Corp was intimately involved in advising, the China Railway and being part of that advisory group. So of course they were going to look at different models around the world to see what actually worked. And that's just a very, very good model to fund and to support, public transportation.
I think there's another theme also that I think you're currently fighting. I think that you haven't won the argument yet, which is overcapacity and then new energy vehicle. So the prevailing narrative is all those companies they are losing money, they get subsidy from the Chinese government, and they just like flooding the market. Basically, it's competing to the death, and then that's why they have to go outside. Overcapacity narrative. So I think this also you start to have your point of view that's actually different than the prevailing narrative. Can you tell me more about this?
Yeah, and again, kind of a similar theme. I think with the EV sector, I've again borrowed from my due diligence experience and really gone in at a company level and try to build a bottoms up view of the profitability of the entire sector. Because again, it was kind of similar like to HSR, where there's like there were people looking at it financially, but it'd be very, very high level. Be like, it has this much debt. They just focus on certain numbers without context. With the EV sector, you got like talking points out there, like there's no EV company that's profitable. So, like my approach again is to instead of sort of arguing and trying to win like the vibe battle, I just try to boil everything down into objective numbers. Well, what are the subsidies, right? And so I did an analysis on what the actual subsidies were. It turns out China did subsidize the industry, but it was less than what people were saying. And the key thing now is that China was subsidizing it until it got to a level of scale where it could continue to sustain itself going forward. I think that's the key. The key to subsidies is to eventually reach a point where you don't need the subsidies anymore. And China is getting to that point. The other analysis I did was just on understanding the profitability of the actual players in the market. And the good thing is like almost all of them are publicly listed, and so they all issue financials. And the most challenging aspect of this analysis was that most Chinese EV companies aren't pure EV companies. There's a group that are pure, but the SOE car makers and some of the large private car makers like Geely are, they started with ICE businesses and they transitioned over to EVs over time. And so part of that, the analysis there was just trying to break out, what they call a pro forma snapshot of what the ICE business looked like and what the new energy vehicle business looked like by making certain assumptions on allocating overhead and making assumptions on gross margin. That really aggregated up to an industry view that I think was different from the consensus producers. I think far from being like this like money pit, the Chinese EV sector is actually the only segment in the world that is profitable on a non-subsidized basis. I mean, anybody who understands fixed cost unit economics, like capital intensive businesses, understands that scale drives profitability. So the one country that has been scaling is China. So yeah, they were profitable when they're selling 4 million EVs a year. They weren't when they're selling 9 million. I think they've reached profitability when they hit 12. And then this year they'll be profitable after, even excluding subsidies, which means that growth going forward is funding incremental R&D, and that R&D is building on an advantage that China already has. Warren Buffett, compounding effect that's happening right now. Yeah. So I think there's been a number of misunderstandings or misconceptions in the marketplace, and I have my own theories on why they're so persistent. I think there's incentives,
narrative from the country.
Narratives that support, maybe it supports certain policies or things like that. But to me, it's okay, let's just boil everything down to the numbers and analyze it that way. And I think you can still, if you want to draw a very negative conclusion from my analysis, you can be well, we can't, we don't want to be overwhelmed by the Chinese EV companies. I mean, there's always narratives that you can spin. But for me, I think I just want to make sure that the numbers and there's objectivity in the analysis.
I mean, that's the last, that'll be the last thread that you wait on Twitter I will talk about today, is on economics. I have to say, I don't fully understand because I didn't study economics in school, where you were describing that some of the leading economists misunderstand GDP and what's really happening in China. Correct me if I make your argument wrongly. But essentially, the discounting factor that people apply to some of the physical investment that China is making, especially for housing and for infrastructure, effectively misunderstand the growth potential. Can you explain a bit more what you mean by that?
Yeah, and this one is quite technical. So I don't know if Twitter has been the most effective way to kind of talk about this because the thread format and everything like that. I don't even know if a podcast is necessarily the best way to understand it, but this is my argument. One of the criticisms of China's economic model rests on this idea that the TFP, which is total factor productivity, which is the key part of the Solo equation, has been declining in China consistently since over the last 20 years. It was very, very high during the first export boom. And then when they started investing heavily in residential housing and infrastructure, these longer term assets, it started to decline. And I think the natural tendency, and this is often a cognitive flaw, I think people is extrapolating something continuously. Okay, it's declining, that means it's going to continue declining. And my argument is that it's actually a lot more complicated than that. And that having to understand the Solo model itself, this equation that drives it, but it also has to do with understanding the nature of how capital investment or gross capital formation in China has changed over time. That's a very, very important context. It actually does affect the Solo equation, or I should say the conclusions that you should draw out of the Solo equation. So the context, of course, is that, if we go back 30 years, the key economic driver of the economy starting in the 90s was really export-oriented manufacturing. And so what they categorize as business investment, which is factories and related infrastructure, that was actually the biggest component of gross capital formation in the 90s and into the 2000s. That hit a road bump when the global financial crisis hit, because now that industry was all about exporting. It was products that Chinese people didn't purchase. Chinese people didn't purchase DVDs, or they didn't purchase, Nike shoes. They couldn't afford it for the most part. And so that ended. That was the global financial crisis. And of course, everybody knows China, sat there facing tens of millions of people out of work, and they said, okay, we're gonna shift that. We're gonna subsidize, put 4 trillion RMB into the market to encourage infrastructure and residential construction. And so a lot of those migrant workers literally left their factories in southern China and around the Yangtze River Delta, and they moved to residential construction sites. At least the men did. And now the nature of asset formation is housing, and it's also like highways and bridges and HSR and things like that. And if you look at the nature of those assets, they're just very different from a useful life perspective. Houses are, concrete houses apartment buildings are 30 to 50 years. Local infrastructure, highways and bridges are supposed to last 70 to 100 years. Compare that to factory investment, which is mostly equipment, which is like 5 to 7 to 12 years. So the reason why that shift in that context is relevant is because if you look at the Solow equation, the equation doesn't capture is that while GDP growth is actually slowing down, the pace of accumulation of capital stock, which is a proxy for wealth, was actually increasing. So my argument is that GDP growth was actually impacted by the allocation of resources away from the export processing sector into housing and infrastructure. The GDP does not fully capture the value creation, the more holistic value creation that's happening, because you're building all these houses, you're building all these roads. Now, it does go to the question, and this is where it gets tricky. I think there's still such a big debate. It's true. If you're building houses and you're building infrastructure that's never going to be, then that is bad. But I don't think we've settled that yet, because we're only a decade into the useful life of these assets. The economic value of these assets is their use over their entire, economic life. So we can't make that judgment today. But the data that we do see, because the policymakers did see the risk of continuing to invest at this crazy rate where you're building more and more houses that people are never going to be able to use. And so they put an end to that. They rotated resources out of the housing and infrastructure sectors into renewables, advanced manufacturing, into new infrastructure, starting in 2020. So they made that shift. Now, every year we get more data on how these assets are being used. I'll go back to the HSR thing. China's HSR system is I think the only system in the world that's utilized at a higher rate is actually the Japan system, which is almost universally seen as good investment. If we look at vacancy data, if we look at the absorption rate of housing in China, so that there was a lot of excess housing that was created, but it's being chipped away at. And if we looked at things like metrics like housing, property management, GDP, it's growing very, very robust, which is a sign that these apartments are being actually lived in. And so as long as they're eventually lived in, it doesn't really matter. If they're lived in for 45 out of the 50 years useful life, they're actually going to be really, really good assets. So, I mean, it's a very complicated, I dream and think in models, but that model takes all this, what I've talked about into account, which is it's not just GDP, it's actually GDP plus the rate of change of capital stock that you're accumulating, which is all those long-lived assets.
Yeah, I remember that thread when I was reading it, right? One thing that you said is very counterintuitive, which help me understand a bit better. Actually, the housing stock, it's also highly dependent at the stage of development of a country. Meaning, if your average GDP is $10,000, the value of the housing stock, even if it's exactly the same, is actually much greater because as a population, it's worth more. So there's also a leverage effect, effectively so it's wrong to say.
I call it, Bertrand, I call it like a temporal arbitrage. I actually use my example. So my building here in New York City is about over 100 years old. It was built in the early 20th century. It was built probably mainly by Irish and Italian laborers that were getting paid very, very little. It's still, it was started as an office building. It was converted into residential 40 years ago. And it's a pretty nice place to live now. And it's probably 100x or 1,000x the nominal value of what those salaries that were used to build it. So that to me was like a very useful framework for thinking about and projecting about, the value of this capital stock that China is building. 50 years, people are still going to be riding the Beijing and Shanghai Railway. Their incomes are likely going to be significantly higher. They're going to be like the sons and the grandsons of the college-educated kids today. And they're going to be, I think China's going to be a fully developed country at that point, a rich country even. So they're going to be looking back at their ancestors who built it and probably grateful to them, just like I'm grateful to the Irish and Italian laborers who built my building and the Brooklyn Bridge that I drive on every so often. I think that's a key thing that people miss about infrastructure, that the long useful life of infrastructure means that you can't be stuck in what does it look like today? You have to actually project out into the future, be like, and actually have optimism and hope that you're going to grow into that bright future, which I always thought was very short-sighted when people said, oh, China's building a high-speed rail system that their people can't afford today, which was, I think, largely true. When it first came out, they couldn't afford it. But now they can afford it. I think I recently actually posted about how, and did some analysis about how, it's actually more affordable for the average Chinese person at their average nominal salary to afford taking a 100-kilometer HSR trip than it is in Japan, or it certainly is in the US, where even for like regular non-high-speed rail. So China already has gotten to the point where it's, people are traveling at advanced economy per capita rates, even though its official per capita GDP is actually still just barely crossed into that high income threshold.
No, absolutely. The economists always look at the PPP adjustment, right? Say, okay, China is this. And then when you adjust PPP, maybe China economy is bigger than US. But I mean, forget about the adjustment. You just have to, as you said, right? You travel in China, just experience the price of things. What can I buy if I spend this amount of money? What service, what's the product I can get? And it's very, very obvious that actually the average person in Shanghai today is living a standard living, which is equivalent to, arguably even better than some of the city in the West, which on the average GDP, they actually look much higher, but the experience is even better.
I do want to caveat this by just saying, and looking at the other side of it, which is I think China still has significant challenges. I like to think of it as like people are like, oh, like, China's like, good at this and good at that. Like, what are its challenges? I always like to say, like, China has tremendous challenges. I like to say China has 800 million challenges, because the life that you described, the modern middle class in China is probably only around 2/5 of the population. And they do live a truly modern middle class life that's comparable to advanced economies, I would say today. So there's 600 million people 600 to 700 million people that are living very, very good lives. A generation earlier, that was probably 1/10 of that. But the rest of the 800 million, that is China's challenge, and that is something that just takes time. Right? This is generational change, right? This is the migrant worker, or the farmer who went out to the factory. His son went out to the factory and built urbanized but fairly poor life, but allowed their kids to get educated and go off to college, and now they're working for Tencent, right? and so they've scaled it, but it takes 3 generations, and that's the reality of developing a poor country that had 1.4 billion people, or billions of people, is that's what takes time. So when I think about sort of where Beijing is focused, I actually don't think that they're focused on the US. I think they're still focused on the more than half the country that aren't there yet. Now, when they do get there, if they get there, I think they will get there, I think in the next 15 to 20 years, then their policy priorities, I think, will start to shift, and that's going to be a bit of a different China. But I think for the next 15 to 20 years, they're still going to be very much focused on domestic development and trying to get those other 800 million people, which I characterize like China's got like, probably, the top 1% are equivalent to the richest tier 1 cities in the world. You got the 40% that are it's an advanced economy, and then you've got kind of like a Thailand, kind of from Thailand to Cambodia, all the way down to Cambodia, kind of level of development that needs to be dragged along.
I agree 100%. I think the speed of growth for a city like Shanghai, first-tier city, right, is going to slow down. Has to, because they progress so quickly over the last 20, 30 years. Now, the cities to watch are not even the second-tier city, is the third-tier, the fourth-tier, the fifth-tier city, right? And as you said, the focus should be on policy to make sure those guys are also benefiting for the growth. And they haven't been yet. And that's actually, as you said, a significant amount of people.
But I think you're touching on socioeconomic inequality. That's been another very kind of focus area for me. So, and this is tying into some of my travel experiences out there. I saw just tremendous change and growth in the tier 1 cities, where I spent most of my time, like in the 2000s and 2010s. And then I remember the last time I really went up to Shanghai before COVID was 2018, 2019. I went to Shanghai, I went to Shenzhen. And I'd also visited like cities like Chengdu and Chongqing. And I also visited even like lower tier cities like Kunming and Guiyang. And then I went back on my first post COVID trip in 2023, and I went back to Shanghai, and I visited. I went back to Kunming, and I also visited like Changsha. And what I noticed was like actually Shanghai hadn't changed that much from 2019 to 2024. I think to your point, I think it sort of it hit the S curve, so it's sort of slowing down. But I saw tremendous improvement in cities like Changsha, which I would just put on the same scale as being a tier 1 city where Shanghai was in 2019. So there's big move up there. And then Kunming was and Guiyang were like where Chengdu and Chongqing were like 5 years earlier. So it is sort of dragging on. I think it's important to recognize that this is actually intentional. This is the policy direction. It was export oriented development model was very like drove like inequality to all-time highs. Just the nature of that model, right? But then domestic development, real estate infrastructure, that's spread out development throughout the country. So it started to spread out the gains of economic development more evenly. And then that's only continued. I mean, that's the root philosophy, I think, of common prosperity, which is to kind of say to the tier 1 cities, like, you guys are, doing pretty well, like, but it's time for the others to kind of catch up and let them catch up. I even see it, interestingly, I even see this sort of development approach. I don't know if it's intentional or not, but when Beijing kind of directs its, the invisible hand, or sometimes very visible hand, on industries, like with the EV industry, like this year, like BYD, which rocketed out ahead, like Shanghai, like a tier 1 city in the 90s and 2000s. And this year in 2025, it's sort of like, like let the others catch up first before moving ahead. So I don't know if it's intentional, like you can never know for sure, but it does seem like there is some invisible hand here that's trying to guide these.
I think all those cities, municipalities are all competing. You cannot just let couple who are uber aggressive, because there's network effect. Because everybody wants to go to the city, and then they're going to get richer and better. If you want to have a more widespread development, you do need to help the third and fourth tier city. Since we talk about policy, the 15 5-year plan was just released, and there's also a lot of comments. The review, if you look at Wall Street Journal, is double down on technology supremacy, and export. I think that's the general consensus right now. So what's your take on the next 5 year?
I think the most interesting thing that popped out from the summary or the readout was what I see as a direction of re-centralizing policy. And my read of it is that this is part and parcel with the direction of where the economy is going. I tend to think of like the Chinese economy moving. The Chinese economy, I think, goes through like 10 to 15 to 20 year cycles. For example, like I talk about export oriented processing. That was the 90s and 2000s. That was like 15 to 20 years. And then domestic like housing and infrastructure, that was the key driver for the late 2000s, 2010s into the early 2020s, like 15 years. The next one is clearly, and this was already set, 5 to 10 years ago, is moving into advanced manufacturing and technology. So I think what the language signals that I got out of that, again, I think it centers or confirms my my thesis that China is still very much focused on domestic development, because Beijing policymakers, I think, recognize that housing and local infrastructure are very local development models. And so you need to empower what Professor Chen calls the mayor economy. You need to empower the mayors to run real estate projects. And again, there's good things and bad things about it, because some mayors are really, really good and some are really, really bad. So you have this but this is one of the disadvantages of China, which is you have to sort of do this peanut butter spread of policy around the country and then but for the next phase of development, which is advanced manufacturing and tech, it's not a local business. Like semiconductor manufacturing, it's pretty clear you're going to have one or maybe two, at most three national champions, right? Every province can't get one. Certainly every city can't have like a foundry. Renewables, that's more at the provincial level. It's a centralized grids. Like I think this reflects Beijing's recognition that for advanced manufacturing and for tech, the administration, you can't decentralize that much, or you're going to end up with, some of the problems like with involution, right? With just extreme competition, which is self-defeating. It's zero sum, right? And I think they're recognizing that the policy apparatus needs to evolve with the natural development, or at least the strategic development of the domestic economy, moving to advanced manufacturing and tech and these high value industries.
Yeah, I think that really resonates with me, which if you just let everybody try by themselves, nobody reach scale, you just actually wasting resources, because they're just competing or creating the scale effect.
I was a big gamer growing up, and one of the metaphors I like to use are some of the games I played, like Civilization or Sim City. And I actually think Beijing, like particularly like the NDRC and the development organs, they almost like view this as like playing SimCity, right? They're like, okay, we're going here. These are the resources. These are the people that we need. We need nuclear physicists. We need this. Let's put them there. So, I mean, again, like this goes back to like, is that the right approach? Like, to me, it's all about the results. So I'm always looking like, is this approach going to work with advanced manufacturing? So far, it seems like it's been pretty wildly successful with all the new energy vehicles and batteries, with solar, and with AI even now. I think as I've been talking about, like sort of there, it's about that ecosystem. It's not actually about any individual one player. It's like when a company like Meituan can just like develop like a state-of-the-art model, it speaks to actually the fact that they can find people coming out of universities and can put them to work relatively efficiently. There's an abundance of AI relevant talent out there in China that the companies can put them to good use. So yeah, I use that model of like Civilization and SimCity in sort of, maybe it's obviously more complicated than that, but I think that particularly the National Development and Reform Commission, they've got decades now of experience of systematically developing the economy, guiding it through and forcing transitions. And so I think they've developed this muscle, right? This muscle which allows them to continue going forward, even as the game changed. Because before it was about catching up. Yeah. Now it's about like reaching the frontier.
I think that's a fascinating angle to look at it. I think is they're playing factorial. It's a massive optimizing the resources and the builder. And I think that's also sometimes people miss from the point of view of the West narrative, at least. It's always an antagonism, right? It's like you play to beat somebody else for hegemony. Whereas, as you said, it's more like I have this massive factory. I need to figure out how to optimize it. I'm not thinking about the other
more
side.
Like a corporation, like there's debate within a corporation. It's not necessarily public or anything like that. It happens, but yeah,
Exactly. So, and I think the other thing people also misunderstand is in China, it's centralized, but everything driven by KPIs. Quarterly KPIs, yearly KPIs. I think the appreciation for most people in the West is a very common control. Someone at the top makes tons of decisions, able to execute. It's the reality is far different. Another thing, I think there's also the Belt and Road Initiative. That people know, which is about building infrastructure, building assets. But now increasingly, the second version of that is really around renewable energy, where essentially in some key region, like in Africa, in emerging market Latin America. So talk to me a bit more about what's your mental model for that?
Let me step back for a bit. I think that the focus on renewables was actually one of the key focus areas for me when I first got into Twitter in terms of just developing it myself. Interestingly, I mentioned earlier, I started out my career like advising oil and gas and electric power companies, and I hated it. I was like, I don't like this industry. I was a computer science major. I wanted to do tech. I grew up in the .com era. Looking back, I'm actually grateful that I had this experience because I think renewables is sort of the evolution of energy, and I've come to appreciate how energy is actually fundamental to everything. I think it's people and energy.
Yes.
Upstream of everything, and energy is upstream of everything. And, I think most people, like, when I was debating China topics like 12 years ago, people unabashedly, or it's very, very clearly I was probably considered a China bull. But at that time, because I read about this stuff and I recorded, I realized that I was probably too bearish. 12 years ago, I wrote this article about like where the world might look like in 100 years. And I thought that China would sort of tap out at like 50 maybe to 70% of like American per capita GDP. And the big reason for that was because of energy scarcity. China just didn't have enough oil. So one of the biggest priors that I've had to update in the last 5 years was just the rise of renewables. And it's gotten to the point where I think that China's mastery and dominance of like renewables, this is workforce, this is infrastructure, this is IP and know-how, is potentially enabling it to leapfrog. Not only like mute what was a disadvantage, which is not having enough energy, but potentially leapfrog. Because if you think about some of the strategic implications of like compounding deployments of energy, it's again, I'll draw in my video game motif, like in StarCraft. Like once you start getting a resource advantage over your, you start like it starts to
just
become
overwhelmed.
compounding. Right. So I think renewables is that for China. And so I've been forced to update my priors on China. I think China is on its way to matching the US in terms of per capita GDP. And the implication of that, of course, is China is potentially going to be as large as the entire West or even larger. Right. So that has huge implications. But why is it relevant to Belt and Road? I think a lot of countries that weren't advanced or fully developed, or still aren't today, the reason why they're not is often because of energy scarcity, or just a function of bad geography, which leads unfertile land, which is a function of energy as well, because how well can the land capture through photosynthesis the sun, right? The renewables, what China is really showing the rest of the world with renewables is that there is an avenue, there's an alternative to the fossil fuel, petroleum dominated world of the 20th century. And it's relatively democratized. Like the sun shines pretty much everywhere. Some places get maybe double the sunshine as another place, but there are places on Earth that have 1,000,000 times more recoverable oil and gas than other places. So it's much more even in that sense. The wind blows in a lot of places where the sun shines really brightly. Historically, it's been very unproductive land, like deserts, or where the wind blows really, really fast. Like people don't want to live there. It's unproductive, not economically valuable land, and renewables completely changes the equation. So I think that tying these two together, China is really understandably leaning into renewables in their effort to reach out to the global south, right? Because most of the global south are countries that see value. They see a path towards becoming where quality of life can, it's a path to modernity for them that they probably didn't see before. Now, is everybody going to, take advantage of that? I don't know. I think that there's institutions still matter. Culture still matters. Circumstance still matters. But I think China is kind of going out and saying, look, I've captured the means of production. I brought it down to a price point which can be very, very important. It can help propel you into modernity, and that's going to be the basis of trade with a lot of countries in the global south. So yeah, I think it's an absolutely huge part of, and it comes at a time. I don't know if it was luck in terms of timing or whether it was actually related, but it comes at a time when obviously the West is turning away from China because China is now competing directly with the West instead of being an economic complement.
Yep.
So while that's happening, the global south is actually becoming more of a complement, whereas in the past, actually, like I've made this point before, and I think people should recognize that China definitely held back development of global south countries, at least in the manufacturing sphere, because they sucked in all that FDI. It was like a hollowing out effect. The early deindustrialization in places like Indonesia and other places. But now is more of a complement than ever to these countries. And so I very, very clearly, and probably relevant for you, is like, trade is going to just continue to grow with the global south. It will continue to fall in relative terms, if not in absolute terms, with the West.
Yeah, and just to reiterate on that, to the human capital thing that we discussed earlier, right? I think one aspect that people misunderstand or poorly appreciate is the engineers. They are some of the top, smartest people working on electricity transmission and distribution. Because if you reconvert everything to electricity and not based on oil and gas, there's some really hard problem how to propagate this energy in an efficient manner, safe manner. And I think China has proven, or has been at least working out the kinks how to do that, right? I think you just look at the earnings, right? What did Amazon say? What did Microsoft say, right? They all power constrained, right?
Yeah.
The chip is not a problem. It's all about, we want to put the chips in the data center, but we cannot get enough electricity. And whoever can get us the power there, we just take it.
Yeah.
And so the biggest constraint is power, as you said. I think by chance, probably China is going to have a huge advantage over the other countries right now on this.
And before, China had, gotten flack for it, of course, but China did try to slog through that by just, this would be pre-renewables, right? China does have a lot of coal, but there is an environmental quality of life constraint that it imposes at some point. That's the huge negative externality of pollution. It's not even like, I don't think about global emissions. It was just about particulates and smoggy weather, and people don't want to live there, and it shortens people. So renewables obviously breaks them out of that. The world is also just shifting in general towards electrification anyway. Everything digital, everything technology is all electrical, and fossil fuels are it's almost like they're like non-native to each other.
Even the other thing, the most I would say controversial topic right now, which is rare earth, right? Rare earth refining is also about energy. So as you said, now it kind of boils down to the energy is probably the most important aspect you need to understand. That's really who has energy
and human capital. I think those two things.
Exactly. Energy and human capital, the two things. Yeah, exactly. I think I feel we spent like almost an hour talking about how great China is, but that is actually not necessarily your only opinion. You also believe US is going to be fine and it's going to have many, many good years. How do you see this dynamic between US and China over the next 10, 20 years?
Yeah, I mean, so, speaking from like the American perspective, I've always thought the downside of focusing too much on China was defocusing on fixing America and fixing a lot of things that were wrong in America. I think this is partly a function of just like a hangover from this idea that America was the undisputed superpower for a generation. And that, I understand, I grew up with that. I mentioned the story of 9/11 and how everything was like golden, amber, like sunset hues. And afterwards it was like gray. That was that era. It was like optimism, like people didn't think it was going to end. So I think that is hard. There's a psychological adjustment Americans have made. And I think it's slowed down the adjustment process because it's been hard to accept the reality that America is no longer the undisputed superpower in the world. But I think that there is a silver lining, which is that life can still be incredibly good. Like America will still be a superpower, may not be the only one. So I think America has lost time because it's been caught up in this mental struggle. I mean, to be fair, I'm not like a national security expert or anything like that, but I think a lot of our economic system and our fundamental assumption of like those policies and the systems where we are the undisputed number one. Like we can, because we have that iron fist, we can extend the velvet glove and just, make things happen, right? And it's harder and harder for us to do that. And I think there are actually real adjustments that we have to make. And maybe it's been easier for the government or the politicians to kick those changes, the adjustments that we need to make down the line. It's a little bit ironic because a lot of the criticism for China is often like, China, you need to like structurally reform and change. And I'm sitting there thinking China has gone through tremendous structural reform. Like every single decade they've been reforming and like life has been changing. And we're the ones who actually need reform. Like we need to turn that critical eye on ourselves. So that's one basis. Now, I've obviously been voting with my feet. My children have grown up here. We actually have 5 generations. My great-grandfather on both sides of the family are buried in here. So like we have roots in this country. We'll continue to have roots. And I am actually optimistic about the long-term future because when we actually step back and we sort of throw off that sort of mental block about like we're no longer the world's undisputed superpower. We're like, well, we've got a continent to ourselves, and we've got tremendous natural resources, and we do have tremendous human capital. I think it's not allocated that optimally, but I think that we have fundamentally very, very strong human capital. And that is the formula for like, I'm a huge fan of Warren Buffett, and he's probably the biggest American bull. I mean, he's spent his entire career on America. And I probably share that sentiment with him. I do think that we are in a rocky period right now because of that mental adjustment that frankly both sides need to make, but I think more the American side, or we could make missteps. I think we've pulled it back from the brink, but I can see it getting worse, actually. I think abundant energy and robots and software and technology that can do things, that these are all things that are non-zero sum. right? Like
Exactly.
fossil fuels are zero sum. Like we had to fight over those. They're finite. But like the stuff we're talking about in the future, if we can
Yeah.
get there, actually is very, very optimistic. So I think it's a critical period in human history where responsible people need to actually come together and recognize that we all don't have to just, there is a pot of gold at the end of the rainbow, but we have to get there. I think the faster Americans sort of change their perception of China and be like, hey, like, China is a peer and we should respect China. And I think I would say the same thing to Chinese people. Like Chinese people shouldn't discount America. I think both can maybe both won't be friends, but they can get along and they can find that new equilibrium, that new geopolitical equilibrium, and both can prosper.
I grew up watching a lot of science fiction and then Star Trek, right? So I definitely believe we are closer to this world of abundance where you have energy, robots helping. Now, they may create a lot of distortion to the economy, a sense of what should we be doing, what's a human doing, what's our worth, right? We have AI robots everywhere. What should you spend your time on? And it's hard for us to readjust our mind from scarcity to go to abundance. And the second thing you said, I agree with you, right? I think maybe it's a function of Hollywood really good at telling a story about you. It's kind of jarring to see about US really being more the Tonya Harding style of competition, right? Trying to hobble your competitor rather than try to work to be the best. And that's actually quite surprising. I think for a lot of people, when I talk to people in China, like a bit disappointed to some degree, because I think in they say the 90s, 80s, right? People in China really looked up to US as the role model of this is the shining city on the hill that we aspire to become. But I agree with you. It would be a mistake to discount US. And as you said, the US has tons of natural advantage to start with. It's like starting with a pair of aces, right? It's going to be really hard to lose.
I mean, both China and the US, it's the biggest enemy is going to be internal. Like the only reason why the US or China is going to collapse is internal. But like the real risk, and I'd say like probably the US is a little bit more risky here. I did a podcast with Balaji Srinivasan, and I was playing the role of defending the US, and like the US is not going to collapse, which is interesting, kind of playing that role like the other side sometimes. But I think there are cracks, right? And I do see a vibe shift, particularly in the last 12 to 18 months. Where I think there is that, the psychological shift happening. I think that people realize that we should just focus on ourselves. Like, okay, China's putting restrictions on rare earths. Like, let's put our big boy pants on. We can do it. We can solve it. I don't think we're quite there yet because I've said that I'll know that we're serious when we start talking about human capital. Like we start talking about maybe we have too many finance people, it's okay for me to say because I came from the industry. I think we do have too many finance people. I think we have too many, lawyers. I think about myself as almost like an example of I probably should have become an engineer and built stuff. I mean, that was my mindset. But I was, I was attracted to like the prestige, the pay.
When you're 22-year-old, you don't know what you want.
Exactly.
Right?
So like, and you have to expect that every 22 years, the market's not going to fix it. I think that's maybe part of the other thing. The labor force is not. It's very, very inefficient for the market to change that because it's such a long-term thing. Like you have to invest at such an early age, and then you have to. Are you going to go to like the banks and tell them like you can't make that much money anymore? Like that's communism, right? That's what China does, and the U.S. doesn't do that, right? But how do you get to that point? Because that is a real structural factor that sucks in a lot of really, really high performing talent into those industries.
No, absolutely. No, it's great. No, thanks a lot. I think we spoke way longer than I expected. It was a great conversation.
No, I think we covered a lot. I hope I wasn't rambling too much. Like sometimes I can't help it. I should hold back on.
How does your wife react when you do this? Like, honey, I'm fighting with someone.
Oh, well, she'll be like, yeah, like, what are you doing? Like, my kids are like, what are you doing? Like, so that none of them are involved in it. Like, my friends don't want to talk to me because they'll be like, are you going to talk about China? Like, I'll be like, no. I'll tell you a funny story. Like, at my wedding, my best man gave a speech, like, talking about, we were working together as analysts, like, when I moved back to New York, or as associates, we were all, like, starting in private equity, and we're, like, that was our peak age of like going out and like this is when bottle service started, like clubbing, and so we'd go out and party, but we were very like process driven. So like every Thursday night we would do a conference call and plan. This is before like Tinder.
Yeah, your Excel sheet. Yeah,
We had a spreadsheet, and like we had all these like Anyway, it was like very very finance. What do you expect out of finance? But I met my wife through this process, and he told the funniest part of his speech was how on these conference calls I would start to like switch the topic to be like, can we talk about the renminbi or something like that? Like on these conference calls, like, nobody wants to talk about who wants to talk about that. And like I realized that like my friend group like don't care about this, and I probably turn away from it. It's like you get the eye rolls and stuff like that. So for me, it's like this was my outlet from all like from my.
But I think internet's great for that, right? To find your tribe and find people who care about these kind of subjects, who actually enjoy, who want to talk about this thing. So that's a great about internet.